Risk warning. Spread betting CFD is a complex instrument to come with a high risk of losing money rapidly due to leverage. 78% of retail investor accounts lose money when trading these products with this provider. You should consider whether you understand how these products work and whether you can afford to take the high risk of losing your money. Intertrader is trading of Intertrader Limited, which is owned and controlled by GVC Holding PLC. Intertrader is authorised and regulated by the Gibraltar Financial Services Commission and registered with the FCA in the UK. Reference 597312, registered address Suite 6, Atlantic Suite, Europort Avenue, Gibraltar. So, the markets, the same 8 charts we start with every day. I just have a little routine. I just make sure all my indicators are up to date just by flicking the time frame. These are little routines you should always be into. When you're doing anything to do with your technical analysis, just making sure you're seeing exactly what's happening in the markets right now. Again, with my iView charts, that happens instantly. There we go. You're set for the day. Take on the markets. The correlations, between the stocks, safe haven, and the correlation between the dollar and the movement in the, the kind of major pairs right now, which is cable and the euro dollar. So, as I said, kind of repeating myself from the last webinars because you want to keep them, as kind of individual as I can. Too many people are, looking at this and going, oh, I wish I bought the pound down here. Well, for a start, listen to my Twitter feed. Then you'd have bought it, months back. Buying the pound, now, yes, there might be, kind of some value. But, the whole point about value is in speculation. Will there be a deal? Won't there be a deal? But it's more important than that. What you have to get into the habit of is identifying the trend or identifying the sentiment and understanding the market's going with the sentiment or against it, and then understanding what that trade is. And I'm saying trade in inverted commas. And then you have to trade within a trade. That's something people find very difficult to do. Each one of these candles that you see here, that's outside the range of these little piddly ones, that's an opportunity to trade. So this might be the trade. It's looking more positive for Brexit. Where could it go to? Up here, you do your higher time frame analysis to see where the market has been and where it could go to. And in between that, that's the trade within the trade. So by all means, put your, buy here, put your stop in and watch it go. Leave it for infinity. But so many people do that, or so many people get involved in the trade and they lose all the interim movement, all the good stuff. That right there, opportunity to make as much money as you could ever want in trading, just in those 4 hours. That's enough. You could retire just on that 4 movement. You honestly could, if you're trading £1,000 a point. But who trades £1,000 a point? Not many people. But, idiots like me, I do. But there we go. That's my style of trading. At the end of the day, what you're going to be looking for is how and why these moves are triggered. And that can be by comments, changing sentiment, data. And, the pound's the best example. If you look on the higher time frame charts, all it's done is sold off. Because, we have Brexit, all that unknown, don't know what Brexit's going to do. You have a no-deal Brexit, it's the end of the world, we're all going to die. So pound sells off, and why wouldn't it? That's the sensible trade in the sentiment. But all of a sudden, Boris has come to the helm. EU's, realised quite a fragile global economy out there. Do we really want to shoot ourselves in the foot? Or do we just want to do a deal with the UK? Do you know what? I think we'll just do a deal with the UK. Now, I've said this for as long as Brexit's been happening. And I've said it after all the negotiations, it's head over heart. Just with the Scottish referendum, at the last minute, we're all going to get our freedom, Braveheart style. And then it was talk about, well, you might have to have your own currency. And what about mortgage rates? What about those pensions? What about all the things you paid for? Yeah, actually, don't fancy that at all. I don't fancy being on my own. Do you know what? I think we'll just stay with the UK. So it's kind of that kind of mentality. And I've also got the conspiracy theories that it's been a big, massive play by the establishment and the MPs and MEPs that they can just talk a load of crap for 3 years and then all the deals are really dumb being behind the table. Just that convenient idea of the backstop. So we're going to have, 5 million people versus the UK and Europe, which is roughly 576 million. So we're just going to appease 5 over 576. Nonsense. Not going to happen. So I think the backstop has just been, a complete misdirection. And, all the real deals have been done behind the table, and it's all carving up the money. It's all the greed, because that's what politicians are. Greedy little, horrible people with the hands in little businesses and getting all their affairs in order, drag it out, drag it out, drag it out, get rid of Theresa May, we never liked her, get Boris in. Boris is the man for a job, he's pals with Trump, and then just let that 1% soak up all the money and opportunity, and then the rest of the population, don't matter, doesn't work, they'll pay for it forever, so we don't care. So I just think really, it just seems too convenient that it's been, dragged on for so long, and then you can just get to the basically D-Day and just go, yeah, you know what, all that stuff, there's a problem. We'll just make it work. We're all pals, really. And then the pound obviously has reacted, strongly. So I was buying pound down here. I was buying pound at every single level. There's no level that, even though the pound's at now, that I don't think is value. Because in 18 months, we're going to be back at 1.37, above 140, probably. Because all the negativity and all the stuff that was the excuse for holding the UK back has gone. At the end of the day, there might be a recession around the world. There might be another credit crunch. But, unfortunately, the US isn't immune from all this stuff anymore. The US has made no friends, and it's made a lot of bad choices under Trump. It's made the whole trade pie smaller. So that dollar isn't going to be, there's always going to be demand for the dollar no matter what, because it's the world currency, commodities priced in it. But it doesn't mean that America is going to benefit from all these things. I think the opposite. So for me, you talk about strong currencies. Yeah, the pound's been undervalued for so long that when we do get a bit of a run on it, you can see how big these candles are, and you can see how big the global demand for these things are. So when I say levels like 140, people say that was unthinkable. I was writing this stuff, in monkey magazines over here, like these Juno guys. They think they're this shit. Yeah, and they got the hump with me because I said that the New Zealand dollar's going to get smashed, and you buy the pound over it, and it was just obvious. And it's just like, yeah, no, we don't really agree with that. It's quite an aggressive style of writing. Well, it's not aggressive; it's just right. I'm just telling you what's going to happen, and that is, again, what is going to happen now is that the pound is going to continue to appreciate, and it's just going to build upon this event that we all really in our heart of hearts, just want to get it over with and done with, and then to move on to whatever's next. Whatever's next has to be better than the unknown and the kind of status quo we've had for the last couple of years. So as I say, I can't see what's going to send it quickly back. And it's moved a lot in the last kind of couple of months. We had a lot of movement. So people getting plenty long here. All the kind of in the know 1%ers and making sure it can't come back just by buying into the profit that you've already made, big time averaging. So when I look on the hourly chart, again, that's where you're going to get your kind of signals and your overall movement. Your 15-minute chart, yeah, again, low point, buy. In 5 minutes, you made 40 pips. Look, just buying above the moving average, so a Bollinger Band. Yeah, just using the fibs themselves. Low, yeah, 5, 10, 15, 20, bang. An hour, hold it for an hour here when it hits the low point. 1, 2, 3, 4. All right, you've lost a bit of money, but it's come back. But you still made money in 45 minutes. Again, look, these low points, daily points of resistance, back up. And it's you're getting those spikes in the 15 minutes. You can even look at the 5-minute charts. The 5-minute charts again show you the same kind of view from the hourly and the 15. But you can see when you get the low points, 15 minutes, you've made your money. And it doesn't always work. You might buy some of these low points, and you might get squeezed out. Or you might buy a little bit, and the move doesn't happen. Then you've got to be patient. The move happens again. You've only had to wait 20 minutes. The whole point is you can be sat in front of your screen 8 hours a day, or like I do, you can check your phone every 15 minutes and see what's happening. Every 15 minutes, you get an hourly close. So you can check your phone every 15 minutes. That's not, it doesn't matter where you are or what you do for a job. It's not unacceptable to be checking your phone every 15 minutes. See an opportunity, trade, leave 5 minutes, get out. There we go. I mean, that's how you can structure your day and your trades, just by waiting for that volatility to come. All of a sudden, it's, you might see a good opportunity around here. The market's really kind of spiking up. You can flick onto any news app and say, oh, look at the headline. Brexit deal, more positive, looking like, we're coming to the table. Then you think, right, well, I might hold that trade for another 15 minutes, see where it goes, or wait till it closes red. So, 1, 2, 15 minutes, 20th minute, yeah, okay, you've given away a lot of profit. That's the thing that I say I hate people doing. But, you've still made profit, and not on good profit out of that move, and then you've waited in it because of the news. Now, at the end of the day, understanding when these kind of candle spikes happen, it's one of two ways. It's kind of, you can preempt the news, and you can kind of think about why a product's moving, and the cable is, a perfect example. Anything positive for Brexit sends the demand for pound up, so you look for low points in the pound to buy because it's going to go up, because that's against the sentiment. The overall sentiment has been we're not going to get a Brexit deal, so the pound's been very negative and selling down. So any positive move, you're going to get an overreaction. And yes, markets go up and they say, actually, no, we're lying, a deal's not going to be done, blah, goes down again. Oh yeah, deal's going to be done, it goes up again. But it doesn't make any difference. If you've just bought low and you bought, kind of too higher low value, then you see you go massively in profit, then you go back to flat. You're in profit, and then you're losing money. It's when the market goes back down here, you don't want that. You want to be in, you want to be out. And really, you should be holding trades for 5 minutes, 15 minutes, tops an hour, because all the movement is gone. And when that movement is gone, then the market comes back before it reloads and goes again. And in that point, you're giving back money that you've made. Yeah, so you're leaving money on the table. And that's what I mean by, just kind of trading within the trade. So again, this might be, your overall picture of the market's up. But you don't buy here because there's no value. You let it come down, you buy again. So yeah, in the perfect world scenario, you buy, you get out. You buy, you get out. You buy, you get out. Oh, it's going to come down. You buy really low and you get out. You're never going to be able to do that because nobody just picks the exact points to buy and sell. But what you can do is either put a long-term position on and forget about it, and then you can certainly trade within it, and that just means looking for those opportunities. When you do see these spikes, these can be trades within trades. Buy. As soon as you're in profit, you get out, and you start buying again. Especially after you've seen this confirmation of a big out of the ordinary overextended candle close. Yeah, you just do a Fibonacci on it. As I've said in the book, anything that looks out of the ordinary is driven by news or something new. So on that one alone, draw a Fibonacci on that candle. Where's the 50%? It's here. Yeah, so as that candle opens, you start looking for it making its way back to the 50%, and if it doesn't, you start buying. Yeah, and as that market goes and breaks up, you're getting another trade. Same again. Big candle, so you try and get as much profit out of that candle as you can, get out, market comes, is it going green? You take a punt, nothing more than a punt, because it's worked here, there's something driving the market, and absolutely, the market spikes up, but then it gives a lot of that candle away, and then consolidates and comes down, but you still got an opportunity while the candle's open to make money. So again, that's 15 minutes of trading, where, you could basically be in, be out, banking. You've got no reason to lose money, because all you're doing is going long and the market doesn't retrace and it closes green. It's only that candle where you could lose money, but you've already made money twice. So that's just, again, from holding and trading very short periods of time and then waiting for the next opportunity. These are the things we need to get into the mentality of doing every single day. Because when you look at these 8 products, every single day you're going to see a decent size, hourly candle, and that hourly candle breaks down to 4 15-minute candle, or again, the corresponding number of 5-minute candles. So again, it's looking for those key points of interest, and that can kind of, as I say, can just come out of nothing sometimes. It could be a random, tweet from Trump, or it could just be some unexpected news. But the majority of the time, it happens from things like, your economic calendar. So just get your economic calendar, and you can focus on, again, countries that you think might have, trouble with their interest rates, or might have to shift on interest rates and talking policy. So Australia, have them on the books, because at the end of the day, they're looking to get down to 0% in their interest rates. So is New Zealand. So it's a race between them. So the sentiment is the market's going down, but anything that changes that, you're going to see, a jump up in the demand for safe haven and commodity currencies. So keep them in the mix. Anyone else you want to see? Kind of the States, obviously. Probably not Spain, probably not Italy, probably definitely Germany. The driver of the EU, Canada. Again, same problems with housing, that kind of stuff. But I'm not that interested really. Do want France. So you do that, and then you can do a filter. What's going to be more important? A little bit important, quite important, very important. Just do the very important ones. Let's do it for next week. So there we go. You've got 4 opportunities and times where there can be potential volatility, filtered into the market. And all you got to do from that point is think, well, what is it? What's going to move from the manufacturing PMI? Well, that might be the euro, or it might be something to look at from the DAX. Yeah. And again, you can stretch this out, for the next month. And as I say, you can be much more kind of proactive with these things. You can break it down into, countries, into central banks, what the rate expectations are, what's driving their market. Then you break it down into currency. And then if you want to be even more kind of pragmatic about this, you break it into currency pairs and think, well, what's going to be the best to trade? So, for instance, I think Brexit's going to happen. I think that there's going to be a deal. I think that's going to bring demand to the pound, and obviously, I think that that's a positive thing. But also being a positive thing, and it isn't a negative thing. I think Bank of England and Carney are going to talk about putting rates up, and I don't think it's going to be putting rates up, again, very quickly and for a long period of time. But I still think their intention before Brexit looked impossible was to put rates up. So then I'd look at currencies that aren't going to put rates up anytime soon. So obviously that's the euro. The euro's not going to go anywhere. So look at the pound euro for that kind of correlation of where you might see the opportunities. Then you look for European data, you look for UK data. What could make your case stronger for a rate hike versus a place that's not going to raise their rates. Yeah, so getting that more bang for your buck. Then again, I've mentioned Australia and New Zealand. Yeah, they dodge the credit crunch and that kind of stuff, but now the economies are slowing, and they're looking to cut rates. So the Aussie dollar versus the pound, and New Zealand dollar versus the pound. So again, look for data, and that's how you can go into it. And you can just have these times, in your phone. Just set reminders. I mean, people are lazy. People don't want to do these things, but it's a 15-minute job. And you could set yourself up for the next week, the next month, or for the rest of time, just based upon, what's going to happen with these figures. And again, if you want to go back to the kind of, slightly less important figures, then there might be an opportunity. Again, if you just filter it out by country, and then, you look at the data that you think's moving that, that country's currency or even their indices, then that's just another way of just refining it down. And you could have basically, I would say probably 20, 30 alerts that are going to go off at any point during a month. And you could trade nothing else but that, because that's going to be the volatility you need. And you can just be in and out of the markets banking money by trading in the way I've just shown you. So that is as easy as that. It's all free. All you've got to do is put a little bit of time into understanding why currencies are moving, what figures are going to move them, and then just look for them when they are. I mean, how difficult is that really? It's not. Then when you come back to the kind of like overview, this is it. It's thinking, well, what is going to come out in the markets that's going to make these big candles? Is it going to be in relation to Brexit, to the trade war? And these things, some things you're going to miss. There's absolutely nothing wrong with missing a big move. You can't get everything. And some moves will happen overnight, some things will just happen and you just miss them, and that's just part of trading. The whole point of these kind of webinars is to not lie to or make it some mysteriously alluring business. It's like anything else. You have to make every pip count, so you've got to have a decent amount of money. Yeah, if you can't get a decent amount of money in the UK, then you've got to go to an offshore broker and get your leverage back, and you use less money with leverage to make more money. And it's nothing wrong with getting partial amounts out of trades. You need to drum out your head that this, you've got to be right. You've got to buy the low and sell the high. These are just things that are designed by, again, the people that are out there and talk about trading just to keep you in the game, just to kind of keep you ticking along, because then they think they've done their job. I'm not trying to do that. I don't care if you lose all your money in one trade. I honestly don't care. Yeah, I'm teaching you how to make money and big money out of trading. And that's what I could never do before with the educational webinars. Yeah, what I'm telling you is the absolute reality of what trading is. If you want to make a living from trading, or you want to be rich from trading, then you got to be trading 20, 30, 40, 50, 100 pounds a point, and you need to be trading 10, 15, 20, 30 times a day. And you've got to be doing those trades within trades and banking. And it's not like you've got to be over trading because you pick specific points in the market when you see these big candles and you see the volatilities there, and you're buying, then you're selling, then you sat on your hands. Market consolidates, then you're selling. Yeah, so that might be 5, 6, 7 trades in that candle, 10 trades in that candle, then this, and then you're done. But what you're doing is you're not just over trading by buying and selling and just getting caught up in the churn. you're understanding why that market's moving from a technical perspective, why it's moving from a fundamental perspective, and you're just trading with the direction of the market at the time, getting in, getting on side, banking money. Is that trade good? And going again. Because what will happen is, if you just try to do the one trade, you'll get long, you get squeezed out, and you think, oh God, yeah, this I'll do a 50% on this, and then yeah, that could hold here, and then it could go to the moon, and in 3 hours I could be massively on side. What happens is you're on side, yeah, then all of a sudden you're off side, you're losing money, you're averaging, you're buying, then you're out. Then all of a sudden, you're trying to buy here, yeah, you're going long again, and then you've lost considerable amounts of money, then you're out. Then you're averaging at the bottom, and you're just holding on, waiting. So you've taken a trade that was meant to be a short-term trade, lost again, then doubled down, and then lost. Yeah, you can't lose if you get out for profit. Nobody goes broke continually banking profit in trading. It goes back to there are old traders, there are bold traders, there are no old bull traders. If you want to trade 50, 100 pounds of points in the DAX, yeah, that's big money. That's big volatile movements. So you want to be in the markets for the little amount of time that you can. So that means any little blip, then you get 300, 400, 500 pounds on side, bank it, take it, get out. Is the trade good? Go again. Is it not? Wait. And that's what you have to do. Turn on that kind of intense enthusiasm, that kind of concentrated, almost like that trading in the zone type stuff. When you're seeing it, trade as much as you can with as much size as you can, and when you're making money and it's working, and as soon as it stops working, stop trading, because that's what people don't do. They buy here at £2 a point, they get to here, and then it's like, oh yeah, I made £100, and it's like, oh, I made £150. Oh, I've only made £100. Oh no, I've lost my money. And it's like, what you're not doing, you're not participating in the market. You're a bystander, you're a spectator. You're just watching the market go up and do whatever it wants. And then because you're trading such little size, it's only £150. Yeah, well, if it's £100 a point, you'd be 15 grand on side. And it's like, would you take that? Well, yeah, I probably would, Steve. Yeah, of course you would. So this is what you need to get into the mindset of doing. So data, again, as I say, is just a very easy, bog standard way of giving yourself, an idea of when currency pairs and when, the indices, could be moving. The other one is just to kind of basically, as I say, be a bit of a slave to the screen. And at the end of the day, the mobile app on MT4 is absolutely perfect. All you need to be looking at, is the quote screen, or just check it every 15 minutes. And every 15 minutes in the DAX to just say, right, where's that candle closed? Yeah, nothing of interest. That could be quite interesting. A lot of tail sort of rejections, get a little bit long, yeah, to a fib level, in and out. And then all of a sudden, bang, you're getting 10 minutes here, or well, half an hour here of really good action. And, as I say, you can be in and out, in and out, in and out, even, selling a high, in that kind of 45 minutes. If it's convenient, you can just be in and out and making money. And then it comes down, and yeah, a little bit more movement here. These are still big enough to get involved in. What I'm saying is, you'll see the candles in the range. Yeah, and all these, the tails are still opportunities. If the market's just ranging and going up and down, all you're looking for is just, this candle is up. Yeah, where's it going to close? And if it starts jumping back quickly here, you can just sell it. Make 10 pips, then you're out. Buy it a little bit, sell it a little bit. It's difficult because you do get into the point of, every trade's a trade or everything's an opportunity. And that's why I say it's good to have that kind of data around, because the market's moving based upon a reason. And, the data can be expectations. They can move before, like the CPI in the New Zealand dollar yesterday. It moved the market down 30 pips before it rallied 100 pips. And that was 5 minutes full of data. That could be people getting out. That could be people that have a nod on the figure. It could be anything. But, it's an opportunity around before that figure starts for the market starting to prepare for what is happening. And that could be a change to the sentiment. It could be what is expected. But as I say, if you just kind of look around, so a big event, 5 minutes before and 5 minutes after, you're going to see probably some movement. So you're guaranteed to have at least an opportunity to trade an overextended candle, for instance, and, do your fibs, a whole chapter in the book of just a perfect way how to make money, where to enter, where to exit. Yeah, the fib is the perfect way to trade unexpected movement, or even if it's expected movement. It's just the best way to look for a reversal or a continuation trade. So again, there's nothing wrong with just looking at your quote screens or looking at your favorite products every 15 minutes. I don't think that's obsessive. I don't think it's much to ask for. And realistically, instead of a lot of people that I mentor that are sat in front of their screens for 8 and 9 hours a day, they do start to overtrade and they do go a little bit kind of trade crazy because everything turns into an opportunity. How many times do you look at your phone anyway for emails? For Facebook. So 15 minutes for your charts. I mean, that's not over the top anyway. And as I say, probably 2 or 3 times a day when you're doing that, you see an opportunity. Just bang. Have your sentiment ready. Have you an idea? As I've said to you, when you look at your 8 screens, what do I tell you every single time I've been on doing these webinars? Yeah, buy the dollar low. Yeah, I buy the pound low, or I sell the euro high. Yeah, buy dips in the stock, sell gold high. So that's all I'm looking for. Is gold value? Is it high? Is it high? Is it going up for no reason? Yeah, good. Sell it. In, out. The pound, is it low? Is Boris going to say something stupid? I don't know. But Brexit's going to happen. I'm sure of it. We're at a low point. Brilliant. Buy. Oh, it's come down again. Doesn't matter. Buy. Oh, I'll have a think about it now because, it's probably the 50% of that spike of a move. So it could go either way. So let's see. Let's see if it starts to go green. It goes fast. Look at the 5-minute candles. Look at the 50-minute candles. Are they going? Yeah. Just keep going. Keep buying. But I'm not looking to buy to, the next key level at 1.31686. That's where it could go if it was spiking. But I'm not going to buy and hold because I'm already long, 1,000 points below that. So leave that running. Don't worry about that. Trade within your trade. Yeah? Be in, be out, be in, be out. Because it makes just common sense. A candle, in a 15-minute, 5-minute candle, it's not just going to go 100 pips in a straight line, is it? Never. It's never going to do that. It's always going to go up, and then short-term traders are going to take the profits, so it's going to come down. So why would you ever hold something for more than 5, 10, 15 minutes without expecting to give some of your money back? Yeah, all right. Sometimes a candle will open and it will close towards the low and then it will continue, but it's quite a rarity because there's so many algos out there. There's so many kind of bots, black boxes, grey boxes, prop traders, funds. They're getting in, seeing that movement, and when it goes up, again, someone's wrong, so they've got to get out, and it might go up even more. But then people take profit, so it comes down. What you don't want to be doing is holding the baby. You're buying, you're out because the market does this. Yes, great. The next candle opens and it goes higher. But, if you'd have held on here and it come down and got out, then, you might think, oh, well, it's probably going to go down now. I'm not too sure. Then the market opens and you miss the opportunity. If you just think, yeah, it's going up. Yeah, it's up here. I'll take my money. Yeah, fine. Good. Wait for the next opportunity. It's down. Right, I'll start buying again as that candle opens. Then you're making money. And you're already making money with the confidence of playing with the profit you've already made. Leaving money on the table, watching your P&L swing going up and down is one of the biggest mistakes traders make, because they can't make the distinction between trading, which is not speculating, it's not looking for the low and and the high, it's trading the movement, and also with the trading style of being an active trader, being a prop trader, being a scalper, being in and out and banking profit. You can trade 10 times, within a move that goes 100 pips, and you can do that in the space of 5 minutes. Yeah, when I used to trade on the floors and in the house in London, we used TT, used the ladders, and you're in, you're out. You had your orders, so you pressed it, market moved, and you're out without doing anything. This is the reason why I think people have benefit from using like quite simple algorithms in an MT4, and you can set it, like just do a simple algo that when you buy the market, it's got a 5-pip stop or a 10-pip profit target. You could have that written personally by, someone on Upwork for about $50. And you can just press the button and you're either going to get stopped out or make 10 pips. So you just go stopped out 10 pips, stopped out 10 pips. It's going up, buying it. Think about that. And then you could buy, knowing that the orders are in the market, and you're just in, you're out, you're in, you're out. And people don't want to do that. And I don't understand why. You can sit on your phone. Many times I've sat on the phone just watching TV and not been that interested. There's £20 a point in the DAX. Buy that. Yeah, £100, £200 on the side, but out. Yeah, we'll sell it now. Sell. And, you can get flippant about these things. But that's how prop traders trade the market. As long as you have that volatility and these big candles, it doesn't really matter if you want to buy it or sell it. There's still going to be enough opportunities to get in and to get out. because when you look at the 50-minute, 5-minute charts, it's just movement. Yeah, the times where you get top and tailed, so when the market ranges and you're looking to get too much out of the market, so you buy in here, yeah, oh, the market comes down. And you buy it again, the market comes down. It's like, oh, but I keep buying it, I keep wanting to get that money. Well, hold on, you did buy it, and you were probably £50 on side because you're only trading £2 or £3 a point, and then you get greedy. You think, oh, it's going to go to the moon. Trump's going to say something. Then you're offside, and you've lost all that money. Then you buy it again. Oh, you've lost money. Buy it again, and you've lost money. And then it goes. Oh, but you're too tired by that point, because it can't go. But then you'd only made 150 quid out of that anyway. But if you start trading, 20, 50, £100 a point, bang, you made $1,000 in that candle. So why are you going to give it away here? You're not. You're taking that money off the table. And again, you're buying, bang. Whoa, I'm $2,000 on side. Definitely taking that because it comes down. Oh, and it gone back up. Oh, is it going to go to the moon? I don't buy something. I'm getting out. Might have lost on that trade. Then it's down. Oh, it's low now. Yeah, bang, I'm back in. Up. I mean, I don't know how simple I can make it. That's going back to something like the DAX, for instance. What you need to have on your screens is, the market's going to go up. Yeah, and it goes up for whatever reason we say. The 1% buying it, everything's too big to fail, whatever. I mean, it's irrelevant. Every time we try and close low, it goes up. By the time you try and buy it, it'll do this and come down. That's why, again, you have to be looking at the 15-minute charts and looking for value. It's certainly not going up now, so you can sell it if you want. But again, I prefer to buy the dips, so you let it come back, bang. Yeah, dip buy the low. Yeah, you're in. And, sometimes you're not going to get, the lucky break, and it's not going to kind of, keep jumping up and you keep making the big money. But you can still get in and get out. And if you trade the right kind of size, even, £50 a point, 5, 10, 15 pips, you're still making, 2, 3, 4, 500 pounds a time. And that's enough. That is enough in trading. You need to do that, 4, 5, 6, 7, 8, 10 times a day, throw in a couple of losers, you're still making £1,000 a day. So £1,000 a day is 200 grand a year in trading terms, if you can do it. But the problem is, and this is the main problem I have with big traders. They mentor with me, they listen to me, they get into this mindset. It takes them a lot, some a short time, some a long time. They listen and they get it, and then they forget it. Then they get cocky. Then they start holding positions, and all of a sudden, they're not holding, getting in, getting out, making those, £1,000 days, £2,000 days, £5,000 days, and banking them. What they're doing is they're holding, they're averaging, they're £500 a point up here, waiting for it to go to the moon, and then all of a sudden they're down here, they're 20 grand offside. Now I've seen people wipe out £250,000 accounts in a couple of weeks doing that kind of stuff. As soon as you change that strategy and start holding, you will lose. Not if, not but, not, oh, I know differently than you, Steve, or I know a guy on Facebook, Steve, or whatever. I'm telling you 100%, if you don't do what I say and go in, go out, be in, be active, and the second you start holding something over an hour, especially overnight, you are wrong and you will lose. You will lose, and you will potentially lose everything. Yeah, I'm not making it sound easy. If anything, I'm telling you that you have to forget everything you've known, everything you've learned, all the bollocks about the 1% risk rule of your account and that kind of stuff. You have to be variable. You have to be variable with your risk. It has to be variable with the conditions that you're seeing. If the markets are moving like this, how can you have a 1% risk? You'd never be able to put a trade on. Yeah, so maybe you have to have a 5% risk. But again, your trading size, you're going with the trend, you're in, you're out, you're banking. And as soon as you bank some money, what you're doing? You're playing with profit. Who says it should be 1-to-1? Who says? Tell me who says? What, some mystical beast on the internet? There are no rules in trading. The only rule is you make money. That's the only way you keep score. That's the only reason that you're any good at trading, because you make money. All this stuff is meant to keep you, in the game for a long period of time. So everybody teaches you things like the 1% rule and that kind of stuff, because you will not lose a lot of money. But what you won't do is make any money. This is the difference. You won't lose, so you think, wow, that mentor's good. I haven't lost a trade in blah, 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 3 months. But you sat in front of the screen for 3 months and you made 300 quid. What use is that to anybody? You have to be using your risk, using your tools, which is your size, your ability to size up with the movement within the market. And that's the key point here. And that's what I'm saying about, trading within trades. be going with the trend or even going against a trend, but you can only do it for small periods of time. Anything over 15 minutes, anything especially over an hour, unless it's trading off big news or big sentiment changes, you're going to start giving money back. So be in, be out. And as I say, it only works on big size. You have to make every pip count. Because if you're doing it on a pound, a point, you're a pound on side, you're £2 on side, you're £6 on side, you're £6 offside, you don't care. You know, it's the price of a beer. Nobody's interested. If you're £600 on side and you go £600 offside, whoa, what happened there? You know, I need to be, thinking about that. And I can talk about trading with, that kind of automated stops, or you can start to put orders in the market, and get the blips of the market to get you out. At the end of the day, you have to be in these things, and sometimes, you have to be doing things preemptively. It's going up and you're selling and getting out of your position before it goes, too far up. Because if you miss it, the market's come down, you give away your profit. How many times have you thought about, should I get out now? And then by the time you've thought about it, the market's come back down. Now you're thinking about a different trade. You're thinking, oh, should I buy more now, or should I go short? When the profit was staring you in the face. Yeah, trading's about those seconds, those pit movements. Yeah, those instances. You have to be living it. You have to be right there, real time, happening now. Yeah, the markets, that's their job. They're telling you what is happening right now. And the money isn't to be made unless you're a long-term trader. And that's a whole different thing. I'm not teaching that. Yeah, you can buy here and sell here. You're a genius. But if you're a long-term trader, bang, bang, you've lost money. Yeah, you've had all that money here and you've given it all away. If you're a short-term trader, you've got all the opportunities to buy. And if you want, all the opportunities to sell. I'm not saying that everyone can do that. They can't. To be truly market neutral and buy and sell for pure value and movement is a very rare skill in a trader. So I'm buying spikes because I get it. It's the DAX, it's the stocks, the 1%, and they're buying them at every level because what else has got to do with the money? And if it goes down, it goes down. I might have a little tiny go at it, but most of the time I just ignore it. Wait for it to go low again, and bang, I'm back in because I have the confidence, because I understand the fundamentals, the technicals, to keep buying the dips in stock. Yeah. So then you just go back to your overview and you think, right, what looks tasty? What's going to be moving? Is an opportunity? Is an opportunity, for the markets to be out of sync here. The S&P looks a little bit high, FTSE and DAX looks a little bit low. So if that kind of reverses, go back up, could it be an opportunity to buy some FTSE low, buy the DAX low? But then you'll think about the busy times in the markets. The open. I've always said don't trade the open, but you can do if you want. It's going to be busy. What I'm saying is I don't like to start the day, losing money. And the opens can be a very profitable thing for some traders, tending not to be for me. So I tended to not trade them. So you got the US Open, you've got 12:30 when you generally have some big US data. And I've just shown you the economic calendar, how you can look for guaranteed volatility. And then again, basically, just check your phone every 15 minutes. Look at those 15-minute candles or even 5-minute candles if you're a bit more active. Again, I always look at the overview and the hourlies because that's just what I've always done. That's how I like to look at it. And when I see something that I think is going to be good, I go into the old time frames and I look at the daily, hourly, 50-minute, 5-minute. That's why you should have something like this, that you just, completely customize and show you exactly what you want to see at any point in time. And then you can just kind of note some key levels down on your phone. And again, just look at everything on your phone, because then, you don't have this kind of overwhelming, information. It's just like kind of, down there is value. So I'm going to buy it. Up here is value. So I'm going to sell it. And that's, you just walk around with the world at your fingertips, just thinking, yeah, wow, DAX has spiked 100 points. Quick look on the news. Oh, a little bit of news is not anything massive. I'll fade that. I'll sell it. Oh, yeah, that's good. Yeah, in, I'm out. I'm in it. Yeah, oh, well, the news might be okay. Down to 50%, I'll buy that. Then all of a sudden, 50 minutes, half an hour after that little bit of news or that spike, you've had 4, 5, 6 trades. You might have made yourself all the money for the week. It isn't pie in the sky. But I'm saying if you don't do it this way, then you'll never do it. And if you don't be organised and have these economic, kind of key points, of data, and know when they are, then you're going to miss them. If you don't know what products they're going to affect, then, you're going to miss them. If you don't know how you're going to trade it, what the sentiment is, and if you should be buying or selling, then you're going to be on the back foot. And if you've not got your account funded, and you not have the ability to trade, as I say, 10, 20, 30, 40, 50, 100 pounds a point, then you're not going to make as much money from it, are you? So, yes, I'm making it sound easy, so I've broken it down to the 4 key elements that you need to have, but you need to have all those 4 key elements. And yes, I'm sure you'll say to me, oh, try that on demo account for a couple of months, Steve, see how it goes. By all means, do that. The money, the learning, the satisfaction, and the motivation that comes is by doing it in real time. Yeah, there is no second chance in the market. Yeah, and the markets are gonna disappear soon. Everything's gonna be Elon Musk and Facebook coin and kind of algorithmic AI trading. So us dinosaurs, and that's what we are. Us dinosaurs at some point won't be able to trade the markets. So there isn't any better time than now than to do it. There's no better way than trading, this kind of ideas and this kind of strategy than doing it with live money. And as I say, you have to make each pip count, and that requires a bankroll and a decent amount of size. And I've said this, in a roundabout way for a long time. But as I say, I've been focusing so much on the education and that kind of stuff because that's what I was told to do. Yeah. Now I'm just telling you the way it is. If you want to make money trading, this is the way you do it. And it's a very specific type of trading, and it's a very specific mindset. And once you kind of get into it, you won't be able to kind of get out of it because it's too good, it's too addictive, it's too profitable. And yes, yeah, you're not going to get those opportunities every day. So you have to be able to quickly identify it's a ranging day. I'm not seeing these moves, so trade less or trade smaller. When the markets are giving you the opportunities, trade more, trade bigger. So you have to have the self-confidence and the self-awareness to only use it when it's going to work. And that might be every other day. I don't know. Or it might just be in certain products every day. Not everything's going to be moving. So that's a mindset thing. And as soon as you switch back into being too greedy and trying to get too much out of a trade, you will lose a significant amount of your account because then you won't be able to be wrong. In trading, you've got to be able to be wrong. So it's like, yeah, I'm buying it and making money. And I'm always going from that perspective, aren't I? Well, you're making money going with the trend, but you might lose money. But it's like, well, hold on. I'm only looking for 10, 15, 20 pips. So I'm a $2,000 offside, and I'm only looking to make £500. You need to be talking in those kind of scales, those kind of numbers to kind of get it. Because, for every £500 trade you make, you might, lose one or two £100, £200 trades. So net, you're only £100 up. Yeah. This is the thing, you've got to keep going. And then you get on that run, 2 or 3 winners, and then that's when you walk away because you've made the money. You might be right, you might be wrong, might be right, might be wrong, but you can't be wrong, and then like lose $2,000 and then scalp and make 500 because then it is the wrong risk reward. And that's when it comes back to what Mauro said about the one-to-one. One-to-one, it doesn't work in scalping. It's too quick. There's too many variables happening. So you've got to be thinking in monetary terms of how much you want to make. So like if you put £100 a point on and it doesn't look like it's going, you might get out for a £200 loss. And then, again, you go in and you make 2, 3, 4, £500 and then you're out. It's balancing it up between what you're trying to achieve and what you're trying to risk. And that's all trading ever is. But I don't think you can put an arbitrary, kind of ratio on it of 1-to-1. I think, the time frames that you're working off are too volatile. The markets are too quick moving. And that's just my experience. But the volatility is your friend. That's where you're going to make your money. It's the ranging markets where you're going to get top and tailed sometimes. So again, understand the market you're trading, understand your outcome, and then marry the fundamentals, technicals together, and bank that money. And if you do that time and time again in the markets, then you're going to make you're going to make good money, and it's going to be a much more rewarding way of trading. I guarantee it. What about limit on daily, weekly losses? You should know from the start how much you want to make. So then you should know, therefore, how much you want to lose. You start backwards. You start with a monthly target, break it down to weeklies and dailies. So you want to make 10 grand a month, 2.5 grand a week. That's nothing. It's only 500 quid a day. So what you don't want to lose is more than 500 quid a day or £1,000 a day. and that's the kind of way you work it. You work backwards. Anything else? Anything else you want to kind of ask or kind of go through? I mean, at the end of the day, I'm just trying to be as kind of clear cut as I can with these things. There's a reason why you have these big trading arcades. I used to manage 144 people in size in London, and some of these guys, were making £250,000 a day. It's real. It does happen. But these people had £1 million account, and that was their own money that they've made. So there's all different rules to trading. You get, you read this book and you read that book and the market wizards and this kind of stuff. I'm just telling you from, my own experience of 20 years of trading and, finding every way of trading that doesn't make money. I've learned it. I've got it. I've done that one. But then I've found a way that does work. And I've found a way that not only that, I can bring it into other clients that I've mentored and gone to them well. The reason is why I do these things for free, because all this stuff is free. It always has been. Is that, I turn one or two people into a fund every year. That's what I do, and I back them. So I teach them this way of trading. They get good. I back them, raise more funds for them, and that's how I make my money. So I'm looking for one decent trader, one Ronaldo a year. And that's what I do. So I do all this stuff, all the numbers, speak to all the kind of, wannabes, all the people who've tried and failed, all the people. And it's never the people that you think that make it, and it's not the people that come in with £100,000 account that make it. Sometimes it's people with 10 grand, and they just get it. And then, they bank that money, they scale up, it compounds, they get the confidence, they bring the size up, and all of a sudden, they're the shit. And I can turn them into a fund, I give them the money, I can raise them the money, and that's how we make our cash. So there we go. So get that economic calendar up, get an idea of the state of the central banks out of there, who's raising rates, who's cutting rates. That'll be your best cue to look at your CPI and PPI figures, which obviously inflation, which kind of interest rates are there to control. Look at levels of debt, look at housing, all those kind of things. Again, will be an indication of how quickly rate cuts can come, and any surprise that might come into the markets. Check out the products, that you think are going to be the most strong against the weak based upon those factors. And, check your charts every 15 minutes, put your key data in. Between that, you should have 30, 40 opportunities a month to trade some good volatility, to be in, to be out on the 5 and 50-minute candles and make some money. I cannot condense it any more than that. That's a whole really good webinar. That's a really good kind of, wake up, be proactive. Stop doing the pointless work. Stop reading motivational kind of books by Tony Robbins. Stop watching The Wolf of Wall Street. I'm telling you right now, because you can see it. You can see it right in front of you. If you buy 5 green 5-minute closes, and you do it at £50 a point, you can see how you can make money. It's not a lie. It's just you have to be able to get into your head and figure out how you can make money from it. Trading's not about being smart. It's not about being the smartest guy in the room. It's just about understanding, it's the IQ versus the kind of, EQ, the emotional intelligence. It's who's got the emotional intelligence and get over that imposter syndrome, can get over that. It's just movement. It's just movement. Yeah. If it's green, it's going up. If it's red, it's going down. You have to simplify it as much as you can and just figure out how the markets put your pressure points in, how the markets make you feel you can't do these things, and turn it around and make you feel how you can. How you'll get more confident is by doing things on a reasonable size of stake, making each pip count, making money and banking it and going, yeah, I can do it. Yes, I can do it. Yes, I can do it. And when you're thinking you're wrong and you don't get it, you just stop. Nobody's making you trade. Walk away, go and play golf, go and do something else, check the phone every hour instead of every 15 minutes. Don't be sucked into you have to be trading all the time. Trade when the markets are spitting out money. Use it as a cash machine. Become like me, a time billionaire. I'm not asked about how much money I have anymore. I don't have to work. I've never had to work. I haven't had to work in the last 15, 20 years. 15 years maybe. Work, go to an office type thing. As a trader, I had to go to an office, so I class that as work. Now I don't have to work. I trade whenever I want. I do whatever I want, and I don't have to speak to anybody I don't want to speak to. And because I'm an horrible bastard, that suits me down to the ground. But you might be a nice guy, you might want to interact with the world, but doesn't matter. That's great. Trading can be a part that you just plug in as another stream of income. As I say, check your charts every hour. Do a little bit of trading. Don't be as active. Make the markets work for you. They're not going anywhere. They're just churning, making the money. And remember, it ain't millions and billions anymore. It's trillions that are going through the markets every day. All you need to do is get a tiny percentage of time, a tiny percentage of that movement, but it all has to be magnified by the right kind of size. If you're not kind of trading a decent account or a decent kind of stake size, then all this stuff is generally for nothing. Yeah, I mean, I don't know. I can't always predict the future, Andy, but I generally have. I mean, at the end of the day, it's just another. If there's more algos than humans in the markets, then it becomes algo driven, doesn't it? I don't know. Who knows? It's difficult to say, isn't it? But yeah, I mean, there might be a different way that we trade in the future. Who knows? Who knows? But what I'm saying is, there's no time like the present. The markets are still there. I've got people that are trading, 7, 8 figure accounts. seven-figure accounts, sorry, 6, 7-figure accounts, and making good money, and it's not like pie in the sky stuff. It really is happening. But yeah, we all know it is getting harder, and automation and all that kind of stuff has its own problems. I could do a separate webinar about Elon Musk and the rise of the billionaires and the family offices, and how we're going to be left with two classes of people: those that have everything, those that have nothing. It's literally going to be like that, and the automation stuff isn't doing us any favors whatsoever. But that's a different conversation for a different time. So it's really easy to make money on a 5-minute, 50-minute time frame using just points of interest. Well, I'm going to say it's really easy, but when the candles are big on the 5-minute, the opportunities are there. It's you can look at any chart, and it's like, yeah, consolidation until something happens, then the market opens up, and this is where you want to be involved. Yeah, and again, on the 5 minutes, if you have your kind of points of interest in play, again, your fibs here, for instance, this is quite a difficult one because you obviously you've broken out of areas because of news, so your technicals aren't quite as good, but it's still there. At the low point, you can still buy back to the 50%. It's just buying. Yeah, you're getting 20, 30-minute bursts of directional movement, getting back to where it's been, where the point of interest, like an iView, you're just buying in the range. It's, as I say, it's something you've got to try, something you've got to do. There's nothing in trading that's easy. Nothing that's easy. If it was easy, everyone would be doing it. What I'm saying is it's easier if you get your mindset into trading this way and getting that mindset of being able to be in and being out and trading within the trade and trading within the trend. Not overholding trades and giving the market an opportunity to take your money away. So as the market's going up, you're selling as the market's going up, which is counterintuitive because you want to be seeing where it goes and then how much money you can make. That isn't the point. It's like you've made the money, it's there in front of your screen, take it off. If you still think when you've taken it off that it's going to go again, buy it. You're buying it higher, but it doesn't matter because you're not looking for the same amount of movement. You're just looking for it to get on side. Then you take it out. That's the mentality you need to get into. I think it's very important in these markets because as soon as you try and convince yourself you're right or you're wrong, or you understand what's going on, it's game over. Because if I don't understand what's going on, then nobody does. And I've had to teach myself to forget things and to not overthink things and not to overanalyze things, because otherwise you just sell every high of the stock market and just sat there and lose money. And a lot of people that I've mentored have done that. Just sat there, watch the markets go up and be short. And haven't done anything about it. This way, don't really take too much of a view over the value view. Just buy and sell where you see value, be in, be out. All right, guys. Well, there we go. I think that's another very valid point that I've made on this webinar today. So, third part of the series is going to go on as long as, I don't know, while I'm under Intertrade, it'll go on as long as I say. And if I don't, I'll do it under probably my own or do it under something else. But again, make sure you watch these, try and put them into practice. The charts are there for anybody who wants them for free. The mentoring there, it's anyone there that's free. But, you have to bring some money to the table and show me that you're serious, because I'm not putting any of my time in, for people to be trading £1 a point and to learn. Go and learn on your own. Yeah, what I do is I do the mentoring and I get you to where you need to be, but you need to kind of, come battle ready and ready to, to get to that next level. All right, guys. Well, been a pleasure as always. Any time you want to get me after this, just get me on Twitter at Steve Ruffley or live chat. Site's been redone at the minute, so that's down actually. So just on email or Skype, Steve Ruffley. Just Google me. I'm not a difficult man to find, and I will happily chat to anybody. All right, guys. Have a good one. Take it easy. Speak to you soon.